Imagine the sheer delight of your child receiving a scholarship, perhaps covering a significant portion of their college costs. It is a moment of celebration and immense pride. But then, a practical question might pop into your mind. What happens to all those carefully saved funds in their 529 college savings plan now? Will those savings go to waste, or are there special rules to help you navigate this wonderful problem? If a 529 plan beneficiary receives a tax-free scholarship, you can withdraw an equivalent amount from your 529 plan without incurring the usual 10% federal tax penalty. This means you can tap into those savings for other purposes or even return them to the original account holder without facing an extra penalty for non-qualified withdrawals up to the scholarship amount. The reason for this special provision lies in the intent of 529 plans, which are designed to help families save for qualified education expenses. When a scholarship covers these expenses, the Internal Revenue Service provides an exception to prevent a double benefit scenario. Essentially, the amount of a tax-free scholarship reduces the maximum amount you can withdraw from your 529 account for qualified expenses without penalty. However, for any withdrawals up to the scholarship amount that are not used for qualified education expenses, the earnings portion of that withdrawal will still be subject to ordinary income tax rates, but without the additional 10% federal penalty. To make the most of this rule, first determine the exact amount of the tax-free scholarship. This will be the maximum amount you can withdraw from your 529 plan without the 10% federal penalty. Next, consider whether there are other qualified education expenses that the scholarship does not cover, such as textbooks, supplies, or even a laptop, that you can still use your 529 funds for. Only after those expenses are covered should you consider withdrawing the scholarship equivalent for other uses. Remember to keep meticulous records of all scholarship, awards, and withdrawal dates. An important nuance to grasp is that while the earnings portion of a non-qualified scholarship withdrawal is taxable, your original contributions to the 529 plan are always returned tax-free. Furthermore, you do not have to use the withdrawn funds for education to avoid the penalty in this specific scenario. This offers tremendous flexibility, allowing families to redirect those funds toward other educational goals, future savings, or even personal investments, all while sidestepping that common federal penalty. Ultimately, securing a scholarship is a fantastic achievement that empowers you with more financial flexibility for college. By understanding these withdrawal rules, you can ensure your 529 savings continue to work effectively for your family's educational journey, allowing you to maximize every dollar saved and every scholarship earned for the best possible outcome.